Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the sell side was dominant and ES got pushed down very close to yesterday's low, where responsive buyers have been active so far. And then the selling that we saw yesterday confirmed that Tuesday's upside move was now a failed breakout attempt. So heading into the open, we know that over the course of yesterday afternoon and in the overnight session, the sellers have been more dominant. And at this point, we do have to exercise some caution on the long side. Heading into the open, we have pre-market support at 68.75 to 69.75, which marks yesterday's low. And if the market continues to hold above it, then it would signal some stability in the market and it could open the door for a push back up into the 75 to 76 pre-market resistance, the gap fill, and a test of the 77.5 to 80 initial resistance zone, which is really a key area at this point. On the downside, below 68.75, we have support at 65.5 to 67.5, which marks the previous week's low. But if we are breaking down on high downside momentum and broad market weakness, and it's shaping up to be a balanced breakdown from the overnight session, then we need to be a bit more cautious at initiating a new long at 65.5 to 67.5. Now that is a decent area of support, and given that we don't have any economic releases pending at this point on the day time frame, and then we have Yellen's speech tomorrow, it's unlikely that we're going to get a big directional move one way or the other, or at least a sustained directional move one way or the other. But we could actually test below 65.5 in order to find buyers. So it doesn't mean that we have to sustain below 65.5, but we could certainly test below 65.5 in order to find the next group of responsive buyers. So a test of 59 to 61 is possible today. It's something that we'll have to determine in real time to see the level of weakness and the level of downside momentum that we're seeing on the day time frame in real time. So if the tick is holding completely below zero and the advanced decline line is quite bearish and trending lower, then it would be possible to test 59 to 61. Now that still marks larger time frame support, so the expectation is for responsive buyers to defend and be active at the 59 to 61 area for a move back up beyond 65.5 to 67.5. So the idea is that even though we can break below initial support, it's unlikely that we're just going to sustain and trend to the downside, given that there isn't any major economic catalyst due today. Now, again, that does need to be validated and confirmed in real time, but given that 59.61 is larger time frame support, the expectation would be for buyers to defend and be active, and then push ES back to 65.5, 67.5, and possibly even a bit higher. On the upside, 77.5 to 80 is really the key resistance area, and the expectation is for sellers to be active there on first test. And in the event that the market moves beyond 77.5 to 80, it would serve as a confirmation that we are still pretty much stuck in a balance and neither side is really dominant or in control, but sellers could still be active at the next zone at 83 quarter to 85 quarter and even at the previous VPOC of 81 half. So even if ES breaks beyond 77.5 to 80, it doesn't necessarily mean that the market is very bullish on the smaller time frames. The short-term bias would still be neutral, and sellers could still be active at 83 quarter to 85 quarter, and same goes for any resistance zones beyond that. So our short-term bias so far is neutral. Our overnight bias has been bearish, and for that reason, we just need to exercise a bit of caution even on the long side. But because the larger time frame bias continues to be bullish, if we're getting very good trade location, like at the 59 to 61 area, that's still a high odds long setup first time down. So that's really the view heading into the open. We're going to be selective. Expectation overall in the day is for the market to be balanced, but again, that doesn't mean that we can't poke a little bit lower before we find buyers and start balancing yet again. So, we do want to be cautious on shorting the market at too low of a price as well, because we could just continue balancing within a range. So those are the main ideas. Let's see how ES responds to the pre-market support and initial support. That'll help us establish the short-term bias on the day, and we'll take it from there.